Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Forex Weekly Ritual. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And as always, we're definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to prepare for the upcoming week. So, without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage, especially during these weekend sessions. Preparation is key, right? We don't believe in chasing trades. We let the trade setups come to us, and these weekend sessions are critical. So let's make sure that we start with a very strong foundation. As always, step number one in the inner circle, making sure that each and every day we are ready to take massive action, meaning that we are accepting all possible losses before entering a trade, preparing you for any outcome. Let's make sure that we center ourselves in body, mind, and spirit, ensuring a balanced approach to trading. Let's trust in our education, strategy, trading skills, and intuition. And let's imagine our trades successfully materializing, all the while obeying our trade strategy, avoiding decisions based on greed or fear. And let's make sure that we are never looking back or stopping once the trade has commenced. If everybody's all ready to go this morning, do me a huge favor. As I see people logging in, drop me a 1 in the chat. Let me know that you can hear me loud and clear. And we are all ready to go. All right. Okay. Awesome, awesome. See it coming in. I was out for last week, out of town for this session, so I am actually looking forward to crashing the charts after a super busy week. I was out of town with friends and family. My brother and his wife had an awesome baby shower, so it was exciting. I was always glad to be home back in Cincinnati, Ohio. So, but hey, back to work this weekend. Yeah, okay. It was awesome. It was awesome. A lot of friends and family. What's cool is that the two of them grew up, from since kindergarten, and all the while everything comes full circle. They're now married, child on the way. It's pretty cool. What's fascinating is that we all grew up together, grew up with her brothers, his wife's brothers, and we all played high school football together, and we actually went and played college football together as well. So exciting. So it was definitely special this weekend. So yes. So with that being said, let's take a look at the fundamentals, right? We got the latest issue of the Swing newsletter out. So let me make sure I can share my sound. And 1 second. Share sound. Okay, right? And for those of you who are wondering, hey, where is it, right? We got all these circle tabs. You just head on down to the Swing and you can see the report. So try to get it out as soon as possible, either Friday or early Saturday, so everybody can listen to it. And there we go.
Welcome to the Swing, the official newsletter of the Forex Trade Room, Volume 13, April 12, 2024. This week, the dollar surged to a 6-month peak, propelled by geopolitical fears and persistent U.S. inflation concerns. As tensions mount with potential military actions between Iran and Israel, the dollar benefits as a safe haven asset. Inflation data revealed stronger than expected price pressures, pushing back expectations for Federal Reserve rate cuts to possibly September. The greenback dominated, notably against the Aussie and Kiwi dollars, while the euro and pound dipped to multi-month lows, and the yen hit a 34-year low. Closing the week with a 1.6% gain, the dollar showcased its strongest performance since last fall. The Australian dollar hovered around 65 cents, facing downward pressure due to strong U.S. economic indicators that suggest the Federal Reserve might not cut rates as deeply as previously thought. Currently, the markets forecast a modest 40 basis points of rate reductions from the Fed in 2024, a decrease from earlier expectations. In contrast, Australia's job market remains robust, with unemployment dropping to 3.7%, complicating the Reserve Bank of Australia's next moves amidst steady inflation at 3.4%. Although the RBA has paused rate hikes, it remains cautious, needing more proof of declining inflation before considering rate cuts. The Canadian dollar dipped to its weakest level in 5 months, trading past $1.36. The surge in the US dollar, prompted by safe haven demands amid escalating tensions between Iran and Israel, heavily influenced this decline. Domestically, the Bank of Canada held its interest rate steady at 5% and adjusted its economic growth forecast upwards, which has supported more hawkish views within the bank and dampened immediate hopes for rate cuts. Governor Macklem has expressed the need for more conclusive evidence of declining inflation before altering policy decisively. While the Bank of Canada might lower rates as soon as June, contrasting expectations in the US, where robust inflation figures might delay any Federal Reserve rate cuts, further strengthening the US dollar. The Japanese yen plummeted to a 34-year low, breaking past 153 against the US dollar. This drop comes as robust U.S. economic figures dampen the likelihood of significant rate cuts by the Federal Reserve, now expected to ease by only 40 basis points this year, down from earlier predictions of 60. In Japan, despite official warnings about the yen's decline, there's been little respite. Finance Minister Shinichi Suzuki emphasized that authorities are closely analyzing the underlying causes of the yen's movements. Moreover, Bank of Japan Governor Kazuo Ueda indicated a potential reduction in monetary stimulus if inflation continues to rise, even as Japanese rates remain much lower than those in other major economies, fueling carry trades that further pressure the yen. The New Zealand dollar has recently dropped below 60 cents, influenced heavily by a robust US CPI report that strengthened the US dollar. As a result, expectations have shifted, with the majority of traders now believing the Fed will hold rates at their highest in 23 years through June, pushing potential rate cuts further into the future. Back in New Zealand, the Reserve Bank has paused interest rate changes for the 6th time in a row, as they navigate high inflation and softening economic indicators. Although inflation eased to 4.7% in the last quarter of 2023, it's still above the preferred target, and the country is facing a recession, with sinking confidence among businesses and consumers alike. The Swiss franc has notably weakened, dropping past 0.91 to the US dollar, marking its lowest in over 6 months. This movement highlights the growing disparity in monetary policy expectations between the US, where inflation remains high, and Switzerland, where inflation has cooled to 1% in March, the lowest in 2 years. Recent economic data, including a dip in business confidence and shrinking retail sales, suggest the Swiss National Bank may consider additional rate cuts by June. Remarkably, the SNB was the first major central bank to cut rates in this global inflation cycle, a move that has contributed to the franc's decline. Additionally, easing inflation has allowed the SNB to scale back its currency support, with foreign reserves increasing since last November. The British pound has plummeted to its lowest level since last November, now trading below $1.25. This drop comes as investors flock to the dollar, influenced by geopolitical uncertainties and anticipations that the U.S. Federal Reserve will not lower interest rates anytime soon. Compounding the pound's woes, recent U.S. inflation data came in hotter than expected, pushing the timeline for a Fed rate cut back to September. Across the pond, expectations for UK interest rates have also shifted, with forecasts now showing a decrease to 4.75% by the end of 2024, a more conservative adjustment compared to prior estimates. Adding to the cautious stance, Bank of England official Megan Green highlighted that the UK might face a longer period of high rates due to sustained inflation pressures, which are seemingly more entrenched than those in the US. The euro has dropped to its lowest in 5 months, falling below $1.06. This decline is influenced by different expectations for future interest rates from the European Central Bank and the U.S. Federal Reserve, alongside growing geopolitical risks. In its latest meeting, the ECB decided to hold rates steady, suggesting a potential ease in monetary policy by June if inflation slows as anticipated. This contrasts sharply with the Federal Reserve's position, where persistent high inflation in the U.S. has pushed the anticipated timing for rate cuts from June to September, bolstering the U.S. dollar's appeal as a safe haven amid international uncertainties. These dynamics are further complicated by increased tensions in the Middle East, particularly between Israel and Iran, heightening global security concerns and driving investors to the relative safety of the dollar. The Mexican peso recently slipped to below 16.7 per USD due to escalating conflicts in the Middle East, causing a shift away from emerging market currencies. Domestically, Mexico's industrial output has unexpectedly contracted, while inflation rates have dipped below expectations, with headline inflation at 4.42% and core inflation reaching a new low since May 2021 at 4.55%. These figures are shaping up the monetary policy landscape, potentially leading to further rate cuts by the Bank of Mexico, which had already reduced its key interest rate from a record high in its last session. Oil prices are on the rise, with WTI crude nearing $86 per barrel, influenced by ongoing tensions in the Middle East. The area braces for possible escalation following threats from Iran and continuous conflict in Gaza. Gold hit a groundbreaking high of $2,410 per ounce, climbing 3.4% this week alone. Investors are turning to gold as a safe haven amid rising tensions between Iran and Israel, which could potentially escalate into a larger conflict, further inflating global prices. In addition to geopolitical fears, gold's surge is bolstered by robust demand from Chinese investors, who are grappling with a volatile local economy and few viable investment options. Wall Street concluded this Friday on a stark note, with significant indices like the S&P 500, Dow Jones, and Nasdaq all registering sharp declines, marking their worst performance since January. The drop was primarily driven by disappointing earnings from key banks such as JP Chase, Wells Fargo, and Citigroup, all reeling from the effects of persistent high interest rates. Additionally, escalating geopolitical tensions in the Middle East have dampened market mood, exerting further pressure on stocks. In the tech realm, major players like Microsoft, Nvidia, and Alphabet retreated, while AMD and Intel faced significant sell-offs following China's decision to replace foreign processors, indicating a tough road ahead for these giants in key markets. As the week wraps up, the cumulative losses have mounted, highlighting a cautious outlook among investors as they navigate through economic uncertainties and global conflicts. This week's financial landscape is set for a busy schedule across the globe. In the United States, the spotlight is on the first quarter earnings season, beginning with heavyweights like Goldman Sachs and Netflix. Investors will also parse through U.S. retail sales data and housing market updates, while Federal Reserve speeches are expected to draw significant attention for future policy clues. Over in China, critical data including the third quarter GDP and industrial metrics will indicate the economic recovery's pace amid ongoing challenges. In Europe, the UK will release its latest inflation and unemployment figures, providing insights into the economic impacts of recent policy changes. Additionally, inflation rates from multiple countries will be reviewed to assess the global economic temperature and its influence on market conditions. Other key data includes trade figures from major economies and sentiment indicators from Germany, which will help gauge business outlooks. That brings us to the end of this week's Swing newsletter. As a reminder, don't forget to tune in for Mindset Mondays with Ryan Carthage starting at 6:30 a.m. Eastern Standard Time. Enjoy your weekend and good luck in the markets next week.
All right, so tons and tons and tons of fundamental data, right? This is ultimately what drives the market. That's why we talk about it, right? Constantly, what's going on fundamentally, right? So we can match that with our technicals, right? So we believe in having a grasp of both, right? And so that's the Swing newsletter for this week. That's volume 13. And of course, again, right, if you're looking for it, where can I find it, right? Just head right into the community. head to the swing, okay? Click on it, and then right here on your left-hand side, and then you will see the swing newsletter. So a very, very valuable resource. And then again, right, don't forget, Ryan posts a ton of awesome blog articles for the group, okay, in regards to what's going on fundamentally. So lots of information there. So make sure when you're in the community, you click on that resources tab. And then also, if you're inside the community and you need to take a quick look at what's going on in regards to the economic data for a particular day and week, you can also find that under the resources tab inside the Inner Circle community. All right. So that's that. Any questions regarding the fundamentals? But hold on, before I ask that question, Ryan, good morning, sir. How are you?
Good morning, bro. I'm doing well, man. How about yourself?
Oh man, I'm doing great. All right. It's Saturday. The weather starting to warm up. Leaves starting to fill in on the trees, so it's time for that yard work. So
Yeah, man. Got a nice little sunrise happening right now.
for sure. Anything on the fundamental front?
Kind of just to reiterate some of the things in the newsletter, right? We've been talking about how these escalations in the Middle East would pick up the risk-off environment and what that means, and you see you see the yen taking on a lot of that risk-off sentiment, right? You saw some sharp moves from that. So continue to keep an eye on the Middle East and what's happening there. As things escalate, you'll see more capital go into a space that's safer as opposed to being in the stock market and things like that. So, but that's it right now, man. Newsletter is awesome.
All right. Appreciate it. All right. Any questions regarding the fundamentals from anybody? Nope. We're good. All right. So let's head on over to the charts and let's take a look at the dollar, right? Okay. Definitely bullish. Okay. We know what's going on fundamentally with the dollar. So when we come and we match that with the technicals, hey, we've got good confirmation that the dollar is pushing long. Will we eventually come into some resistance levels and have a correction? Yes, right. But for right now, this crown pattern on the daily is playing out. It is playing out. All right. So here we've got our subfibs running. But when we talk about a traditional crown pattern, we can actually, right? So we've got the smaller fibs running there, but when you talk about a crown pattern, and we have an ABCD wave, right? An ABCD wave, okay, to the downside for a bullish crown, followed by an up ABCD wave, where we take out that A, we pull back to that right tip, okay, and then we look to get long, right? So in essence, you're looking at a larger fib like that, okay? Looking at a larger fib. So we're in this current ABCD wave, so that 107 70 level, right? We're going to come into resistance before that, but we are headed in the right direction. So again, we've got the direction right. Then it's just a matter of on these lower time frames, looking at this DXY, tracking the fibs to see if we're going to get any near-term correction. So on this 4 hour, right, you can see how impulsive the dollar has been as of late. 105.95 is the extension on the 4. We've got 105.86, a level of resistance. We'll probably push right past that and hit that D extension, and then we may be looking at a correction on the dollar, right? But that's how the sequence plays out down through the time frames. Any questions on the DXY? Nope. All All right, so we are good to go. All right, so the dollar has been long and we know why. Jumping into, right, we'll move on and we'll take a look at the S&P um, earnings season. A lot of reports coming out. So we, technically we know where we are. We're at a price level that's pretty exhaustive, right? So we are due for a correction, S&P on the weekly chart. Okay, so we've got it trying to form a high. We're turning over. We are in our classic 80-20 zone. On the daily, we've been watching it for some time, and this is what we mean, right? By that price stalling out and starting to move sideways in that zone. Okay, in this zone. And now we're getting that price to turn over. Okay, so we can clean this up a little bit. We can take this out. That was the previous ABCD wave that was completed. Okay, that's our number one price action pattern is the ABCD wave. Right? Follow the wave. Okay, so that pattern is over. And now we're looking for some sort of correction. Okay, some sort of correction on the S&P. So we'll continue to watch the data. Like I say, as we are in earnings season, a lot of reporting going on, busy week next week. We saw that with the swing. So we'll see if we continue to get indices pushing to the downside, okay? Any questions on the S&P? We're
Yeah,
good?
Benny.
Yes.
Yeah, so I've just been thinking about the indices, especially the S&P, and kind of trying to get more clarity on how the fundamentals, just a second, how the fundamentals shapes its direction, but I always get confused and I just need help to get a little bit more
Mm-hmm.
understanding on that, yeah.
Mm-hmm. So typically when we're talking about, stocks, talking about indices, when you've got a strong dollar, right? Depending on why the dollar is strong, like right now, we're thinking higher interest rates for longer. Okay. So you first of all, the market's been pretty much parabolic, right? For quite some time. Right. Definitely through the first quarter, last quarter of last year, you can see it, right? Just moving up and up and up and up. But right now, the market, so if we go back and we think about it, the market was pricing in the possibility coming into this year, 6 interest rate cuts through the Fed, right? So borrowing costs are expensive, right? For businesses. Okay. It's not cheap right now. Okay, as compared to when interest rates were pretty much at zero, right? We know that the Fed had to accelerate interest rates because of the inflation narrative, everything coming out of COVID, whatnot. Okay, so it's been a long road, right, to get to 2024 and where we are now. But when you look at especially the last CPI report, you start to see where there's a discrepancy between what the market had originally priced for the Fed to do in regards to rate cuts, and what the Fed had in mind. So coming into the year, market saying possibly 6, right? Optimistic 6 cuts, lower those borrowing costs. Okay, the Fed sets the pace for that, and now with inflation remaining sticky, the economy is still rocking and rolling. Wages are still sticky, right? Employment numbers are good. Okay. Well, now the narrative is like, man, well, higher rates for longer. Okay. So it went from six rate cuts. The market was thinking the Fed from the beginning was saying 3 rate cuts second half of the year. Okay. And now with CPI being sticky and that data coming out, it's like, wow, will we even get to 3? You know, you got Fed official Raphael Bostic, right? Saying, and he's been saying it for a while, like maybe 1 cut this year. Okay. So it's all about the sentiment, right? So typically when you get a very strong dollar, then you tend to see, stocks and equities and things like that curve to the downside, right? Borrowing cost, Because eventually when you look at stocks and you look at companies, there's a lot of different variables, but one of the variables is that the borrowing cost, if I have it to where I want to grow and expand as a company, right? And I had plans, maybe I starting to tighten my belt a little bit and we start to see some contraction and I don't invest as much as I can in expansion because the borrowing cost is too high, right? With the strong dollar, higher interest rates, right? So to speak. Then, right, you have to look at, well, the stock market, it's risky, okay? And if we have bond yields and things like that going up, and say for a 10-year bond, I can get 4 or 5% locked in over 10 years, right? I've got my investment cap on, I got big money, then hey, maybe I reallocate some of my money out of the stock market and take the safer play, and I'm gonna go ahead and take this 5%. Okay. So simple narrative that I'm creating. It could be a lot more complex than that, but just on the surface. So I can move. So bond yields go up. It's like, man, like I can get 5%. I'm gonna go ahead and lock that in because that's backed by the security of the US government, as opposed to putting that in the stock market, right? So I may reallocate my portfolio a bit, into a safer a safer asset, okay, which can drive dollar strength, which is what part of what we're seeing, and can create the stock market to lose some gains. So we're seeing a correction right now, but hey, the market's been parabolic. It's due for some sort of correction. Okay. And that's what we're seeing right now. But what that does is for people who have missed the run, stock market, right? What is it? 75, 76% of the time is going up. When you look at past history, but we have to have those corrections because hey, if you missed a run, let's get that correction, right? So we know we follow those Fibonacci principles. Let's get that correction in the market. And so if I'm looking to buy stocks and things like that, I can get a lower price. I can get a discounted price because right now it's high, right? And technically, that's what the market is showing us. So oftentimes when you see this DXY strong like it is, right? And sometimes, right, a company can benefit from a strong dollar. If we're looking at massive economic growth. So it also depends. But right now, it depends on the reasons. A lot of time that dollar is strong. Okay, interest rates, hey, higher for longer. Dang, okay. I thought the interest rates we would be looking at more cuts this year. That doesn't seem like it's going to be the case. And then, right, when we listen to the swing, you heard her talk about that because of a lot of the geopolitical things that are going on, there's a certain level of uncertainty, right, out there in the market. So that can cause a change in sentiment, right? So that can cause the market to tumble. And the dollar acting as a safe haven, right? That's gonna strengthen it as well. So the DXY is up. You see the stock market, S&P 500 is starting to correct, right? If we come in and we take a look at the Dow, you can see, right, the same thing going on. And the way we set it up technically and fundamentally, right? So our Fibonacci framework combined with the fundamentals, Jeremy, it makes it easy to see, right? When price hits those key zones, look at the correction. Okay. So now it's just a matter of how far it corrects. How far it corrects. And so when earnings seasons, right? We've got, I think Friday, I have to finish reading this weekend, Financial Times and everything like that. But we had some, from what I hear, some disappointing earnings reports from some of the banks that have started reporting. Okay, so we're correcting. We're correcting. So to the downside, all right. So this is your US 30 moving down. If we come in and we take a look at the NASDAQ, I've got to get the Russell back up on here. I don't have that. Um, right? So you can see how, again, we're hanging around that zone, right? The price is just high, right? We need a correction. Look how strong the market's been, how parabolic it's been, right? On this last fib sequence on the daily, there was hardly any correction, right? The bulls ruled the day. So now we're stalling, right? We're moving sideways, and we want to see if the market corrects. The market's due for a healthy correction, uh, which to me is a good thing as an investor, because if you want to get involved, I don't want to get involved up here. Okay, that makes sense. To help out a little bit.
Yes, it did. Thanks.
You're welcome. You're welcome. Okay, so that's where we are, right? Taking a look at some of the indices, starting out to see where we are. Let's take a look at the
Danny,
Nikkei. Yes.
I wanted to ask, since the dollar is rising and then you also have gold rising, when you explained the bonds just now, what's the relation um
Well,
with gold?
mm-hmm, mm-hmm. Gold safe haven, right? Gold can act as a safe haven during economic uncertainty. Okay. Then globally, like the dollar is not they're holding rates, but you've got the S&B that cut rates. You have the ECB, depending on the data, come June, may be looking to cut rates. And so we came into this year saying that when globally, right, when we were looking at gold way back when, right, coming into this year, uh, when we were looking at the gold play, we said we want to look to be, because it was dancing around for quite some time, and we said we want to look to be bullish on gold because this year we're looking at going into an interest rate cutting environment. Okay, an interest rate cutting environment, and gold typically does well in those type of environments. Now you've also got some geopolitical risk out there with a lot that's going on that Rand's been covering regarding the Middle East. So this was that last gold play, right? That we played. This was that last ABCD wave uh, that we caught coming into this year, right? Where we had that pullback and then we drew it up there. That was a huge, huge move on gold. And now it's just continued to push, right? And so you can see where we're starting to get that correction now. Okay. See, we're starting to get that correction now because this is gold versus the dollar. Okay, so we've got a few dynamics at play. So that dollar really showed its strength. This here, right? Because we have other pairs that are pegged against gold, but here we track gold versus the dollar. And we know, right, the dollar really kicked in the strength, but how ironic is that it did, right, when we hit that extension, right? So just the combination of the fundamentals and the technicals, the way we teach it is pretty right on point, right? Right on point. So that's why we know we're globally potential interest rate cutting environment. And we're starting to see that play out with some central banks, ECB, S&B, even though the ECB hasn't done it yet. I'm still kind of weary on that one because you had some economists saying that it's not surprising what happened with the CPI, considering a lot of the things economically that's still going on here in the United States, with the strength, key strength areas. But there were a lot of people who were expecting something different with the CPI as well. So what I'm thinking with the ECB is that they're saying, hey, June, we're looking towards it. So they came out, dovish. But what happens, being that they're saying that, hey, we're data dependent, if they get a CPI report, right, that's showing that the CPI has crept up a bit, so that with the market having an expectation for them to potentially cut, what happens, technically with the strength of that euro if they hold rates, instead of cut at the next meeting. So there's a lot, and now as we move through the spring and into the summer months, the election rhetoric and everything starts to creep up. What happens, right? The Fed can't be so quick to cut, because here in the United States, what happens if you have an election and you have Trump for a second term, who the last time, right, part of his policy was tariffs, right? So if you start slapping tariffs, right, again on China, who do we think is paying for that? Those pricing, those tariffs, we're eating that as consumers. So that can play into the inflation narrative, right? So you have to consider all of these things, right? So everybody's cut, cut. But there's a lot of different variables at play, especially this year. You've got a record number of elections globally, right? I think more than any other time in history. So those are things that, and different dynamics that they have to take into consideration, right? So you've got monetary policy, but you also have fiscal policy. So if you come in, if you change, you know, if you have a new president and part of his policy is to slap tariffs, and you start another trade war, consumers are going to catch the grunt of that, right? That cost is going to get passed on to the consumer. Consumers have to spend more, then you still have sticky inflation, right? So just some different things to think about. But great questions, everybody, as we start the morning. Any other questions? All right. So we've got crude oil, right? That's been pushing higher. Okay. You see that this has been rocking and rolling. Okay. And pushing to the upside. Now we've got a bit of a correction. Okay. Now we got a bit of a correction. We can see this on the weekly, and we can see this push, right? Here we are on the daily. We're running into resistance at 87.09. Okay. So overall, right, a bullish move to the upside. We come down here to the 4. Yes, we're bullish. Benny, you said we're bullish. Yes, we're in the up retracement zone, right? We've broken through some major highs, gold. Now you can see here where we've run right back into our 80-20 zone, okay? So at some point, market likes to take a breather. And if it wants to create a higher low and then continue push through this high and make a higher high, right? That's your ABCD wave. Okay. So right now we're in the 80-20 zone. I don't want to buy it if I can get a discount. Okay. If I can get a discount. But with a lot of the geopolitical tensions that Ryan talks about, okay, you have to look and see what OPEC is doing in regards to the supply, right, versus the overall demand. We're going to be going into the summer months as well. Travel, things to think about. People travel more in the summer. Okay, there's a ton of uses for oil, right? So besides just transportation, so we have to think about that. So see if we can get a healthy correction and then look for a continuation with oil to the upside. Any questions on that?
No.
No.
No? All right. All right. So let's keep rocking and rolling. Let's jump into these pairs. All right. Okay. Now, Aussie CAD. Let's take a look and see where we are. Right. Now we know there's Aussie, right? We listen to the swing, bunch of different variables going on with the Aussie, data dependent, holding rates. But right now against this CAD, in the latest correction, we are moving bearish to the downside, right? So you can see we had a bearish week, but before that, we were pretty bullish against the CAD. So we'll see going into next week. But right now, we are trading what we see. And right now, that has been moving down. So we're at this 88.96 level, stochastic, right? That's stochastic. We're overbought. We're exhausted a bit. So if we break through, right? We closed right at the other low here from a day or so ago. If we break through that 88.96 level, we could see a continuation to the downside. So here I have my fib running to the downside. We're right at this 88.96 level. We stalled at this 89.49 weekly level, right at the 50% fib here, right? Past resistance, okay? And we got a reaction to the downside. And so if we break that 88.96 level, we're going to look to continue to this D extension at 88.30 and possibly back down eventually to this 88.04 daily support, right? That's a pretty clean look. And that's how I have it drawn up right now as we speak on that, right? So if we get a break, maybe a retest there, and then a continuation to the downside, okay, on the Aussie CAD. All right. Okay. We may even see, a pullback off of that 88.96 level before it makes its decision to continue down. But just know we're at a key level, right? Past resistance becoming future support. Okay, so maybe we pull back before then, and then continue down. But the idea is still the same. Right now, we are looking bearish. Any questions on the Aussie CAD? No?
No, sir.
Oh,
All right, moving on to the Aussie Swiss. Okay, so we've had this narrative. Okay, hey, surprise cut by the S&B towards the end of last year, right? They, you know, were well last year for a good part. They were decreasing their foreign currency reserves, strengthening the Swiss franc. Now, right, the opposite tends to be occurring. Okay, that's reversing out a bit, and they had the surprise rate cut. So we said, hey, our narrative for against the Swiss franc is long. We heard during the swing some of the things that's going on with their economy and the consumer sentiment. Hey, thinking about the possibility due to some signs of contraction, thinking about, hey, in their retail sales data, thinking about, hey, they may even make another rate cut. So besides the fact that the Swiss franc can actually, act as a safe haven, so we continue to watch closely those geopolitical tensions, right? See if something major happens, we can see the Swiss franc strengthening as a result of that. All right. But right now, based on the data, we've got a pretty weak Swiss franc. And so we are looking to continue long, right? Eventually. So we can see clearly that we've been moving bullish, right? We broke this down trend line. And now we've got a correction, right? It pushes high, it pushes, long for so long, and then it has to take a breather, right? So now we're coming down, right? Maybe we get back to this support, back to this trend line and see what's going to happen. We know we don't have a 382 yet, okay? But maybe we get to a 382 on a daily, maybe not. But right now, you can see here on the 4, well, we've got a 382 pullback, but you can see this correction off that daily level, right? Right at that 127 zone, and we've been moving down. So overall long, right? But we're correcting now. So would I have an issue, right? With this making, a further correction? No, I would be fine with that. But overall, I'm still keeping that long narrative. okay, on the Aussie Swiss. Okay, so based on your 4, right, we're not quite there yet where we want to be a deep correction or anything like that. It bounced off that 382, but we'll see. We come into this 58.62 level, and we'll see if that bullish narrative continues off that level or if we continue to move down for a deeper discount. All right, but that's where we are on the Aussie Swiss. I still would like to keep my long narrative on that. Just waiting to see how deep that correction is going to be. Any questions on the Aussie Swiss? No? Okay. Moving on. Aussie yen. Okay. Been moving long on the yen, right? Making a run, okay? Ryan has kept us well informed with what's going on with the Japanese yen, with the possibility of intervention soon, okay? Typically, we'll have a lot of jawboning, right? We'll have the BOJ trying to talk the price, the price down. And then if they have to intervene, they intervene, right? They don't do it as often as like the SMB might do it, the Swiss National Bank, but they have done it in recent times, okay? And so especially when we talk about that dollar yen, which we'll cover later, but it's been moving bullish for the most part, okay? Everything has against the yen for the last couple of years. The price is getting high, right? Getting high, okay? Right, I don't remember, I don't remember if you remember the guy that was running, I guess it wasn't a serious campaign for president, but he kept telling people the rent is too high. The rent is too high. Even in the debates, that was his thing. The rent is too high, right? And right now with this yen, right, I feel the same way. Like, right, the rent is getting too high on this yen. And at some point, we're probably going to see a pretty healthy correction. Okay, with either something going down or, globally, or the Bank of Japan deciding to step in. Reese, you remember he was from New York. But you know what, Reese? That was some years ago, and people made fun of that man, but he was correct. Because one of the stickiest things right now is housing costs. It's too high. It's overinflated. So people joked about him and made fun of him, but he was spot on. That is a major issue here in the United States. Right? Is the price of rent is astronomical. There's a housing issue. Yep, he was from New York.
Who was
So
that?
I can't remember. I can't remember his name. I can't remember. Did he pass away? He might have passed away, but he was adamant about that. Right? That was his whole campaign slogan. Right? The rent is too high.
That's funny.
So yeah. So the price action on this yen is getting kind of high, right? So we bounced off this 50% level. So I still expect, right? Because yes, they've changed some monetary policy, coming out of negative interest rates, but they're still way behind. Okay, they're still way behind, right? We know the yen is an export country, so still expect things to move along, but we should eventually see a pretty sizable correction. Okay, especially as that dollar yen gets up around one. I think what did it hit 153? We'll look at it. It was up there, but
Yeah, we'll
you know
talk
what I
about it more,
mean?
but it did get to that level.
Yeah, that pushed pretty high. So, eventually something will happen. But this has been our narrative for a while on the Aussie yen, right? We're still moving above that trend line. We're coming into a monthly level here. Price just continues to bounce, right? We get a correction and then it continues to bounce. So we'll see. If we come down here to the 4, and you're gonna see this pattern. The yen can be so weird, right? You're gonna see this pattern on a couple of yen pairs, right? Oh, I got the wrong thing. I'm drawing up, right? Where you saw this price action move. Okay. So we believe, right, a lot of the price action patterns that people look to trade, it all falls within our Fibonacci framework. It all happens along the way. Okay. So yes, we have a head and shoulders. but that just plays into our narrative, right? That we're in an up retracement zone. Okay, we're in an up AB retracement zone. Okay, so oftentimes, like, we'll get the question like, well, Benny and Ryan, like, you're saying this is long and price is moving up, but it's moving down, right? What phase are we in this Fibonacci sequence, right? So there's no doubt about it, we've been bullish, right? But at some point, price is going to correct to give us a discount. So that head and shoulders pattern that people will look to trade short, it just plays within the ebbs and flows of our framework. Okay. So we're in an up retracement zone. So if I see a bearish head and shoulders pattern, it makes sense. Why? Because I like to trade a discount anyway. Okay. I like to trade at a discount anyway. So that just gives me confirmation that, hey, we may see a deeper correction on that. Okay. Now, when the reason why we're watching the BOJ's rhetoric and their decisions closely is because we know when if they decide to intervene, you could easily see a 500 pip move to the downside in one day. In one day. So, that's why we track it so closely, because it is a huge move when they decide to do that typically. All right. And the last time they did it, it moved. And then things continued, right, to move bullish. Okay. So that's where we are on the Aussie yen right now, waiting for this 4-hour chart, waiting to see if we can get a deeper correction, continuing to keep an eye on the Bank of Japan and their moves. But eventually, I'd like to get back long, right, on the Aussie yen, or continue long if you're still long in it, right? Look for new opportunities at a discounted price. Any questions on the Aussie yen? Oh, he's still alive. He's 77. Jimmy McMillan. Yes. The rent is too high. Indeed. All right. So Aussie NZD. Okay. Aussie NZD, right? We are getting the correction finally that we are looking for, right? Sometimes we're swing traders, everybody. It takes a while, right? So we draw up our zones. So what happened was it chased that monthly level at 109.40. Okay. And we held, right? At least so far, right? We're holding. Okay. That's the weekly time frame. Now, if we come to the daily, right, we're just zooming in. Here's our impulsive move to the upside that run against the New Zealand dollar. And now we found, right, the sellers, right? We found the sellers. The price is moving down. So, of course, right, we've had the Fibonacci sequence running to the upside. You all just saw it on the weekly and the daily. It's been bullish. But guess what? We run into 109.40. We run into an 80-20 zone, which is our sweet spot for the counter trend trade. And we are seeing a reaction to the downside. Okay. It's a slow mover. We know that. We've got a weekly level, 108.28, that's going to have to break through. We've got a daily level right at that 382. Right. So just continue, if you're in it, right, off that level, just continue to, it was that about 50 pips. Just continue to manage your trade to that weekly level. We've got another almost 50 pips. Then to that TP1, about 70 pips or so. So that's where we are on the Aussie NZD. I'm going to leave that there, right, for that correction. That is a play that is active. So we'll continue to let it rock. If we come down to the 1 and just running the fibs from the top, right, trading that correction to the downside, we can see where we are in this 1 hour Fibonacci sequence. Okay. So here is the 4 hour TP1 level. That's your 4 hour TP1 there. All right. We've got an inner trend line break. And we know that when that inner trend line breaks, oftentimes it likes to head to the outer trend line. So we're just going to let it take its time and see if we can get a continuation down. Any questions on the Aussie NZD? Oh, all righty. Aussie dollar. Okay. Got the DXY up. Okay. We've got to move down. So we can see that we clearly had a bearish week. We are coming into the 64.38 weekly support. Okay, so if we continue to see dollar strength, we're going to look for that level to be broken. Okay, so here we are in the middle of a fifth sequence from the daily. Okay. Healthy pullback, right? Beyond the A6 retracement, ran into 68.58, and then we've been moving down ever since. We can see that this range, right? So last week we were talking about 66.23 and 64.76. We can see that we've now broken that. So the next stop is that 64.38. We've got a stochastic that's in the sell zone, right? So our momentum could continue to the downside. So if we break and close below that level, we look for further declines in the Aussie dollar. Okay. So here we are on the 4. It's been choppy, right? Got stuck in that range, but you can see the sequence at work. Okay. And having a directional bias, having an idea, and sticking to your idea. Easier said than done. Okay. Easier said than done. We recognize that. That's why we say give yourself time. All right. So here's this bearish move. Okay. Moving to the downside. We didn't quite get a pullback to our buy zone, but when you look at it, makes sense. Right? Makes sense. We have some structure here. Past support becoming future resistance. See, it all plays out within the fib framework. Okay. So you want to look for all those things within the framework. Okay. Right? So it doesn't have to be, piecing together 3 YouTube videos from here, another YouTube video from there. They talked about moving averages. This video talked about head and shoulders and price action patterns. This video talked about supply and demand. This video used a different language, different playbook, talked about supply and demand and support and resistance. Right? It's all right here in one framework. Okay. All right, all right. So that's the Aussie dollar moving bearish. Any questions? Pretty clear cut. All righty. Okay, so let's take a look. We'll take a look at Bitcoin. All right. Moving pretty high, right? Moving pretty high. Come in, take a look at it here on the daily. And we're just choppy. Right? Still within the AB, the AB boundary, up AB boundary on the daily, but just moving sideways. Okay, oftentimes, right? Strong. It's been strong, right, to the upside. So we got to take that pause. We got buyers and sellers. We got to figure it out. Lots going on in the stock market. Lots going on globally. So hey, at some point, we can see how we got a nice lift off here, and now we're just moving sideways, but we're still within that AB boundary. Okay, so we'll see if we can make further gains. So that's Bitcoin. Moving on to this CAD switch. Let's take a look at it, right? So overall, we've been bullish off the low. Okay, spot on there, spot on there. Okay, continue that narrative regarding the Swiss franc, but hey, at some point, right, we'll see that correction. Okay, we see on the daily, we've got a new AB boundary. Price is turning over out of that 80-20 zone. So what we see on the 4 is the move down. Okay, so it's a matter of how far does price want to correct? Okay, so our direction has been up. We're in a retracement zone right now. Okay, looking for a discount to buy. Here we are on the 1 hour where I'm just tracking it out of the zone. Okay, and we can see you got an 80-20 zone in play, and we are correcting, right? So last week, you all remember when we drew this trend line during the session. I think it might have been Thursday, maybe it was Friday. But since then, that trend line has broken, right? We told you keep an eye on that. It broke. Strong bearish candlestick there. Okay. And now we're just making our way down. So we are in the middle of a correction phase, looking for a lower price if we can get it. All right. So we've got the 382 target coming up. We've got a sub-50 extension around that same zone. But hey, we know that depending on your trade plan, right? We say that all the time. You could trade off of 382 if it's in your trade plan. And the reason why we say make sure it's in your trade plan is because it's all about being consistent. So you can get consistent data. So you can get accurate and consistent notes. Okay. To find out, hey, when I take trades off this 382, how often is it going to my D extension? Is it stalling at my B boundary? Is it stalling at my 118, 127 zone and forcing its way back down for a deeper correction? Okay. Am I putting my stop right below the low of support at the 382, right? Because I'm not going to necessarily put it at below my A because my risk to reward will be thrown off a bit. How am I doing it? You know, am I taking a trade at the, am I setting a, am I taking my risk, say 1%, 2%, right? Or whatever you're risking, 3%, whatever you're risking. Am I dividing it up and am I setting buy limits at my different levels? You know, 1, 2, like 1, 2, 3, maybe 4, taking that 2% risk and dividing it, you know, into 4 setups and letting the trade swing, right, at those levels. Okay, and put my stop below the A, right? Because it's the same risk. And then I'm just dividing it up, right? So here, boom. So am I taking that 2% risk and saying, hey, I'm going to trade it off to 382. I'm going to trade it off, you know, maybe the 50 or the 61.8 or, you know, the 786, right? So if my risk is 2% and that represents, you know, $200, okay, I'm dividing my risk by my stop loss. So I'm going to divide those up into buy limits and see if it'll swing, okay? See if price will swing, okay? If it reverses off the 382, good. I'm long already, right? If not, it's going to push lower and pick me up, okay? And stop by and pick me up, okay? Get long. And if it doesn't, and it stops me out, if I get stopped out, how much have I lost? Can somebody tell me that? Right? If I take 2%, divide it up into 4 positions, right? Divide that risk by my stop loss, and then I eventually get stopped out on all 4 of those positions, how much have I lost percentage-wise? Beneath 2%. That's it. Right? So it all comes down to your trade plan. Appreciate that, Beneath. Drop you some 7s in the chat, sir. It's almost like a trick question, right? 2%. Jeremy, my man. 2%. That's it. Because I'm dividing up the risk. Right? I'm dividing up the risk. Right? So it doesn't matter. Doesn't matter how you play it, right? Or, hey, my sweet spots are my sweet spots. I'm only going to trade, okay, my 61.8 and my 786. And if price drops to that level and I want to buy, that's where I'm going to buy. If not, and it takes off before that, then it is what it is. Very simple approach. Very simple approach. Okay? And then we make sure, right? Action, N is for never, that we are never looking back once the trade has commenced. Why? Because we figured out how much we could lose before we ever took the trade. You'll be amazed at how many people don't do that. All right, so that's the cash switch. We're in a wait and see, right? Middle of an 80-20 play, seeing if we can get a deep correction, right? So either you're playing that to the downside right now, or you're sitting waiting for a low price. And that's that. CAD yen. CAD yen. We know the yen narrative, right? So we've been trying to get to this 932 hit target, right? The forever trade. Okay. But have we had the direction right? Yes. That's half the battle. Okay. That's half the battle, right? So we are right now just moving sideways. And I get it. I get it. Because there's a lot of uncertainty around the yen and what the BOJ may do. Right? But all in all, this has been pushing. So far, so good on that from a daily time frame perspective. Now it's just a matter of, okay, well, let's see where we are in regards to the forward. Look at that reversal. Okay. Look at that reversal. So last level we hit was that 8.6, just shy of a boundary. So on this 4-hour move, right, we look to come in for the near-term 4-hour target. We're looking to arrive at this 118 for the 4-hour extension. But you can see how this is the extension for 932 pips or so. Okay, right there. So nothing really doing. Right, nothing really doing right here, right now. Maybe we see if we can get a hold at support and then continue to move long. This is what I'm looking at here on the one at that support level. Kind of watching it closely to see if we're going to get a bounce there, if we're going to get a continuation down. This one is kind of up in the air because of the possible BLJ intervention, but it seems like it's trying to U-turn there, right? So I drew that up to see if we can get a break and a continuation long on that. All right, so that's where we are on the CAD yen. It's made really good progress, but we're kind of just in the middle of nowhere with this range. It needs to break out of this range, okay, and continue to move to the upside for continuation plays. Any questions on the CAD yen?
No.
All righty. Let's look at the Swiss yen. All right. Ryan, talk to me on this one. This is your play, right?
Man, it's been taking its time. It's been taking its sweet old time. But
Yep.
Initially I was looking for it to give a deeper pullback, which I don't think it's going to do now, off the daily time frame. But it was interesting with the risk off sentiment. You saw the Swiss pick up a little bit of steam,
It
and
did.
we saw just the Swiss overall over the last week kind of gain some strength, and I think there's just more retracement type scenarios. And so with the Swiss yen, because both of them are similar from a risk off perspective, we kind of just got a consolidation instead of an actual retracement.
Yes.
So I think over the next week we'll start to see this one pick up a little bit, and that Swiss starts to take a back seat, not just to the yen but to other currencies as well, as things continue to develop in other parts of the world and with the Swiss yen.
I agree. But hey, technically, right? I think the idea is gonna play out because we just need to break, right? That 160, this 166.83, right? This zone.
Mm-hmm.
If we break this zone, right, we're probably gonna continue down. So there's some things, right? Our stochastic is starting to line up in our favor. Yep, we're ranging right now. But if we get a break of that level, you know, we may see the bears come in a hurry on that one, which would be fine with me, considering I've been really just strictly watching this one from this weekly level. Like that is
I think
sitting
that's
really
something I
nice.
what your sarcastic on the weekly looks like.
Let me see. Let me put it in.
You have it on there.
I'll put it on here now. So it's oversold, but that's long term. That could stay down for a while.
I'm just curious because I'm looking at he said it's oversold.
Mm-hmm.
Like even I'm watching this off of the monthly, weekly, and daily. Right, so I'm
Okay.
looking for a longer term move to the downside. So overall, I'm looking like 132, 453. That's a 382 on the monthly time frame.
Oh wow. Okay.
Yeah, and that's looking at from a fundamental perspective. Swiss talking about another cut potentially coming, right? With the yen taking a half of the year, one increase, potentially two increases, getting into 30 basis points. Right. So that combination over the next 6 to 12 months could potentially put us in that range.
Mm-hmm. And then especially with the possibility of S&B cutting rates again.
Exactly. Exactly.
And they're the first out the gate to do it. They may be looking to do it again. I mean, I like it. Like I like the idea to the downside. So it should be quite interesting. So that's where we are, everybody. I am looking and I'm looking for a break lower. So I'm staying patient with this one. All right. Staying patient with that one. So let's see what we get. Appreciate it, Ryan. Any questions on the Swiss yen?
No.
Nope. All right. That's the Swissy yen. All right. The Euro Aussie. Oh, the back and forth, right?
Joy, your order. My bad.
Mm-hmm.
Joy said her order hit on 2/21. You missing this in February?
Yep.
Oh.
Yep. I've been holding my order.
Joy getting the Saturday started off, right?
Yeah, I'm working this
That's
morning.
at the highest point though, bro.
I'm at 168, 373.
Hold on. Let me
Man,
go back.
phenomenal job.
Man, hit those sevens.
Phenomenal job. That's awesome.
Switch in. Let me Joy, what was that level?
168, 373.
Hey, call it. Call it, brother, next time, Joy. You enter that trade. Hang on. Teamwork, make the dream work. At least that's what we say. What in the world?
I ain't gonna tell y'all where I'm at on gold and SPX. So yeah.
so
Well, this is
awesome
the
job.
same person, Benny, that's been holding oil for like 6 months, right?
No.
Oh yeah, I'm still in oil too, and I'm waiting on that drop to pick up another one.
We got the female T-Boone Pickens.
Thank you.
Killing the game. Great work.
Yeah. Awesome, awesome job. So let's move on to this Euro Aussie play. I am Ryan. This thing is bouncing back and forth. But I am holding this to the upside, man. It's been a lot. That's your daily time frame here. I'm gonna come down here to this 4. Looking at these, I'm gonna look at it on the 4 and look at it on the 1. I don't know. I guess I have to see the euro, the ECB actually cut these rates before they're just gonna have to cut them on me, man. But this one has
Well,
been.
so what's interesting.
Mhm.
My bad. What's
No, you're
interesting
good.
on
You're
this
good.
one is you got a back and forth, right? Because
Yep.
ECB gonna cut rates, but we're also in a risk-off environment. But then we have war,
Yep.
right? And so, like with the Russia-Ukraine situation, we saw the Aussie take off. And so I'm still in this long. I'm with you on the long piece, but in the back of my mind, like I'm looking at that next level, that 166, 169 area.
Mm-hmm.
Do we get there installed? I'm trying to just in the back of my mind continue to be aware of the war scenario and how those commodities. Yeah, initially we'll see them soften, but then we could see them pick up some steam in some areas. And so could this be one of those areas where we see the initial soften and then as things continue to escalate and prolong, do we see the Aussie against the euro, the Swissy really start to fly again, and maybe
Yeah.
even against the yen. Maybe that's kind of that scenario with the yen where that Aussie yen could also kick back up to the upside as well.
Got it. Yeah,
You see what I'm
it's
saying?
I'll see exactly what you're saying. It's a interesting scenario. We've got a 4-hour high that's going to come in right there.
Yeah,
But I mean, down on the 1, where I'm really watching this price action in zone, then like you can see, like, hey man, like this was almost back to break even, and this is in profit. Like if it can maintain itself, we're looking pretty good. Of course, it wouldn't be 424 at this point off this 1 hour, but coming into that 167.55 uh level, if we can get it going, I don't know. I guess it's just gonna have to stop me out. And
yeah.
so is how I
I'm
look
I'm
at it.
I'm with
That'll
you on that.
yeah, yeah, that'll tell me right if I'm right or if I'm wrong. That's why I use a stop. So we'll see if that can continue long to the upside, but it's been so much back and forth on it. So we shall see. Any questions on the Euro Aussie? So a lot of back and forth movement. Okay, we saw that on the higher time frame, but so neutral to bullish is what I'll say on that. Euro Aussie until it works itself out. Euro CAD. All right. So okay. Mix when you talk about a currency that's mixed right now, definitely the euro. Right? A lot of back and forth as we can see in this price action, moving around. So it can make it tough to trade. But right now, right, when you get the sideways movement, I tend to, hey, let me look at these horizontal levels. And right now, okay, if we look at this in the near term, we formed a high. We got another high that formed, which actually, right, we could put that in. Okay. We are moving bearish. Okay. So the trading is such. We don't have a daily low yet. Okay. So when we come down into this 4, we're starting to have it form. Okay. Here, but we don't have an official swing low. Okay. So moving down, and then we get to this 1 hour, okay, which is where I'm watching this one. Okay. We can see that I manually put this one in. Right? Because sometimes the move is so impulsive off that level, it takes a minute for the fib to catch up. But you can see we've had a clear ABCD wave off of 61.8. Okay, we zoom in on that, pull back, and then down. Okay, so we definitely now have a technical low. Okay, so we slide that in just like that. You see, we're at the 50% mark. So we'll see next week, if we get a further pullback in the correction, and then a move down on this Euro CAD. Okay. So we'll continue to watch that. See if we can get another drive up, put us a counter trend line in, and see if we can get a break back to the downside. If this euro, like I said, is bouncing around out of all the currency pairs, this one is the most mixed to me right now, coming off the heels of the ECB, right? So we've got, the dovish rhetoric, which caused this to correct to the downside. So we'll see what the market has in store for us next week on a Euro CAD. Any questions?
No.
No?
No, sir.
All right. Euro Swissy. Okay. So, close that off. They're moving bullish, right? So we've been right on the Swiss pairs. Long. We've broken through a high 96.85. That's a key weekly level. And we're retesting it, right? Previous double top. Okay. We want to see if that level holds. So keep that in mind as we move down through the charts. Okay. Because when we come into our daily, we're retesting that 96.85 level that we broke. Right around that 50.61.8 zone. Okay. Stochastics in the buy zone. Now, what I did is because you've had an erratic move, okay, that caused that strong move to the downside, caused some fibs to be taken out. So what I'm doing is I just pulled my daily fib down to the 4-hour. Okay, down to the 4-hour. Right, because you see how everything got whipsawed, took out some A's on those fibs running to the upside. So the cleaner look for me is to track that daily fib. So I just pulled it down to the 4-hour, and this is where we are. Okay, 4-hour stochastics in the buy zone. This is what made sense to me. Okay, so what I'm going to be looking for next week on this Euro Swissy, okay, is can we get evidence that price wants to start to make its way right through the C to D push zone. Okay. Maybe we turn over one more time, right? And push lower. Maybe we don't. Maybe it's putting in this low now. And we're going to take off and break back up above that 98.21 level. Not sure yet. Okay. But can do. Because we can see where we are in regards to the cloud. Okay. Or draw yourself a trend line. Right, to see if indeed this price wants to reverse and continue to move along. All right, so similar scenario we can see here coming down, right? This is the old play. Look at what it did. Okay, on year one, look at what happened. How that pushed up, we hit that daily level, and we came right back down in the same zone, pushed a little bit lower here. Okay, so is it time for this to continue long? So that's that reaction to the ECB data, right? Caused a monster correction, but look how it's holding up. Okay, so that's what I'm looking at. So we'll see what happens next week with that Euro Swissy, but that one is on my radar. Okay, questions on the Euro Swiss? Okay.
No.
All right. And I could be wrong, right? As I am oftentimes. Regarding like this euro, I'm just how much is that rate cut already priced in? We saw the move to the downside. Is it gonna continue to sustain itself to the downside and remain bearish to euro? I don't know, right? We'll have to see in the coming weeks. That one's the verdict's still out on that. But like I said, I don't know after what happened with the CPI data out of the United States. I don't know if the ECB is going to get the data that they want to see come June to make those rate cuts, but could be wrong on that. Euro GBP. Right. So look, you've been in the Swissy since 4-5. That was another play. Okay. All right. Good deal. I appreciate the update, Joy, on that. So Euro GBP, yep, it is what it is, right? Choppy mess. Had a bearish week last week on the heels of the ECB data. Yeah, right. All of that. Okay. All of that. Now, so if we zoom out though, okay, there we go. When you look at this, this is an enormous fib here on this 4-hour. It's just running. Look at that pullback to that 786 level. Okay. So if that were to occur, okay. Now think about it now. The ECB is hinting at cutting rates in June, remaining data dependent. The pound said, not that I said the pound said, the BOE said, probably going to hold rates for longer. Got to continue to look for the data. Okay. So based on this pullback, okay, 786 level, right now we're expecting a 127 extension. If that plays out. So for the enormous mess that this currency pair represents, it's still ultimately following the Fibonacci sequence. Okay. Okay, so there we are. If it's going to tap and work its way to that level, 100 pips left. Okay. We know this pair moves oftentimes slower than a turtle. Right? But here we are. Maybe we get, depending on what happens at this level, this 85.49 weekly level, maybe we can get price to push up to our sweet spot and get short, right? You got 85.70, don't know, right? It may decide to hang out here at this 382 with this weekly resistance, right? And then continue short. So we'll continue to watch it to see what happens. All right. But right now that's looking bearish. Questions on the Euro GBP?
Jim, are you still in your short position on this?
Nope.
No, done for a long time. Maybe not.
Maybe. I know he
Maybe
was
not.
short on that. I know he was short on that Aussie CAD for a while.
Mm-hmm.
The downside. Euro JPY. Right. Still short. He said he's still short. I love it. I love it. We're getting it.
My
So
man.
Sevens all day. Way to be patient, right? You got your risk management figured out, not sweating bullets. It is what it is. Okay. So Euro yen, right? We know everything's been bullish for the most part against the yen. 164.35 weekly level. That's the B boundary. Okay. And you can see that we're holding up there right now. Okay. Daily chart, we have not gotten a 382. Okay, these pairs have been perplexing, these yen crosses. All right. Intervention, that's going to come down. right? If not, we may find support prior to that and then a continuation up, maybe stay in this range. Kind of hard to tell. Ryan, what are your thoughts on this one?
On this one as well, long term, I'm short.
Yep. You're
As
playing
as I said on this one
that yen
before.
case, right? Case for the yen.
Yeah. Because the daily you got that 80-20. Before you didn't quite push into that 118, 127 zone. And even on the 1 hour, you had an 80-20 as well. But yeah, I'm playing the yen case on this one. This one belongs to that Swiss yen, and when you get to that pound yen, those are three that I'm looking at longer term scenarios on.
Well, we're definitely getting the move down, right?
Yeah.
Definitely starting to see the move down here. Okay. All
You had
right.
the nice double top of that daily resistance too.
Yep. Right here in the zone. So
Yep.
to see if we get pullbacks, that's how I have it drawn up on the one. Is exactly that, right? Can we get a pullback and a move down? Right? Do we pull back into the zone, look to deploy our counter trend lines, and then look to continue short? But I'd like to see it move to a higher
Zoom
price
out a
to get
little bit
involved with
further,
that.
bro.
Mm-hmm.
I'm sorry. If
Yeah,
you
that's
zoom out a
okay.
little bit further, run your trades off the low from December 13th.
Mm-hmm.
Which
I've
was
got it
82.
December 7th. Oh,
You
December
got
7th then.
80
Hold
on
on one
that?
second. Hold on. Let me I think I hit it wrong here. Pretty much the same. It's the same one.
Yeah.
Yeah. Yeah.
There's your 80-20 there, coming back down.
Mm-hmm. Yeah. So that's where we are, right? Up retracement zone, right? 80-20 headed to the 382. See if we can get it pulled back prior to it hitting that level. Maybe we get it, maybe we do. Let's see. But that's been a good move because you're sitting short in that, right? Didn't you get short a while ago?
Yep.
Yeah.
Yep. I'm
So
short on that. My entry on that was
that's 300, 220 or so. Yeah, what was your entry?
entry 164, 638. 64.
Yeah. Damn. Ooh. Nice. Nice. All right.
I pulled
150
the
or
trigger
so.
after that first push out of that 118, 127 zone and just held it all the way through that pull back. And yeah.
Hey man, give it up for the patience. He said, Joyce said, played a conservative and got stopped out. That's all right. We may be seeing a pullback. Ryan has been on it.
Mm-hmm.
These yen crosses. Great job, sir. Appreciate you. So that's where we are, right? Up retracement zone. It hit our sweet spot area short. And now let's see how deep of a correction we can get. Great work. Great work. All right. Now, let's move on. Euro JPY, Euro NZD. Okay. Bearish week last week. Okay. Came into the week bearish. See what we can make out of it, right? So overall, okay, been moving long. We tapped in at a 382, and then you guys can see it's just been moving across the middle of our screen in a bit of a range. But as of late, though, right? So we look at this daily and this last leg, okay? we've been making higher highs and higher lows. So now we're in a zone here, okay, where we are okay, in an area, right? Past resistance becoming future support. So do we have a swing low from the daily confirming that yet? No. Right? No. But if it holds, stochastics in the buy zone, right? So we may start to see the momentum start to swing back to the upside. We'll see if we've got buyers there. Okay, 179.38, the weekly level. Can we get back above that? We shall see as we move down. Okay. Through our charts. Okay. It is choppy. It is a mess, right? But if you traded that off of 61.8, if you traded it off around the 786 zone, you are in positive territory right now. Right? That's why we always say, right? We don't care what it looks like. Because overall, okay, this is what we're looking for. End of the day. Big picture, right? On these swings. So far, right, this is moving up. Now, this is that same zone, right? So if we come here and we pull that down, okay, we can see where we are in this same zone now. So the question is, does it hold? Nobody's denying the fact that it's been choppy, swinging all over the place. But like we said, as of late, we've made higher highs and higher lows. So is this going to be, right, continue to sustain itself as a higher low? Okay. We move down to the 1. You get that deep A6 swing. Okay. As long as it doesn't take out the A, it has no choice but to go our way. As long as it doesn't take out the A, it has no choice but to go our way. Okay. So let's see what happens with that. See if we can get that. So we've got the correction, right? You had an 80-20 there in the past. As choppy as this price action is, did it hit our 80-20 zone? Yes. Was it a shallow retracement less than 382? Yes. Right? Yes. You don't have to look at it sideways, turn your laptop upside down. Is it within the framework? Is it in the zones that we like to trade? Yes or no? That's it. Okay. All right. There we go. That's the Euro NZD. Seeing if we can get a bullish continuation. So you all can see why I'm like the most mixed pair out of everything right now is this Euro NZD. Aussie too. I mean, it's the Euro, but the Aussie too. But for the most part, because of what happened with the ECB last week, a lot of back and forth. So that's that. Euro USD. This market is beautiful to trade. You have one strong currency against a currency that has shown weakness like the ECB did last week. Okay? Easy trade. That becomes an easy trade. One extremely strong versus a weak. And that's exactly what you're getting with the Euro USD. No doubt about it, this is bearish. This is bearish. Okay? Ryan said, hey, everybody, you should watch out for this because this is forming a right tip. Y'all remember that? You all should watch out for this pair because there's a crown pattern on the daily. 105.06. That's the daily target. we are going to mark this on our lower time frames. See if we can get there. Current fib sequence. The fib is no longer highlighted because we had an H6 pullback, which equates to a 1.18 extension. And it hit it. All right. So that 4-hour fib is done, waiting on a reset. This is our daily. $1.618 D extension. So this is where we are. There's our extension. Do we have one more opportunity for a high price on the 1 hour to retest that 107.24? Will it give us the opportunity? Will it hold, form a high, and continue down to the daily target? That's the euro US dollar. Bearish, right? So kudos to everybody who may be short in that trade. What will the weakest currency be now that the yen is getting stronger? Well, you parse them out individually. The euro showed some weakness last week because, people pricing in the possibility of a rate cut in June. I still would say that even though the Swissy has shown some strength, a little bit of strength peeping in, I think overall that Swissy, is the weakest besides the yen. And the yen right now, they still haven't done anything. That this is just all, speculating that they will, is where you can see some strength kicking in on the yen. But they technically, besides trying to talk the price down, haven't done anything. So I still would say the yen, until it really shows strength. Like it really hasn't yet. It like I said, you're gonna see if they intervene, you're gonna see some of those pairs drop 300, 400, 500 pips. That's typically what'll happen, and then it will start to recover. So I would say that the yen still and that Swiss franc, and then the New Zealand currency, is what it's looking like right now. I have an even better idea after I get through reading this weekend. But for right now, that's what I would say. So that's that. But right now, I mean, it's dollar versus everybody, right? The dollar is gambling. So if you just right now, a good plays would be like, okay, long the dollar when the dollar is the base currency in the pair, short the dollar when it's the counter currency. I mean, short when it's the counter currency, short the pair when it's the counter currency, right? So Aussie dollar short, euro dollar short, pound dollar short, USD CAD long, dollar Swiss long, and then we got the dollar yen sitting pretty high. So who knows that, but it's continued to push higher. So that those wouldn't be bad plays, right? I know some people that just trade dollar crosses, period. They don't trade anything else. Because you get the most data on that dollar because it's the reserve currency. So if you can you track the dollar, right? You track it all the time. So if you become an expert at tracking that dollar and that DXY, and you stay patient, because we know there's times just as of late where it wasn't moving much, so if you're willing to sit on your hands until the DXY chooses a direction and then trade the dollar crosses, you can make a career out of that. Right? Don't sound too bad, though. Uh, oh, moving on to the pounds. Oh, any questions on the Euro USD? Sorry about that. Yeah.
No, sir.
Yeah. Rich said you've seen it a few times again. Yeah, hundreds of pips in minutes. It's crazy. Crazy when they do that, you know? And so that's why Ryan's been building positions. Like at some point, it's either going to correct because of market forces, or they're going to step in, So trading is all probability. So when you look at how Ryan is building those small positions at those high levels, it's like, shoot, can't knock you for that, right? Can't knock you for that. Everything's based on an idea, right? So, pound Aussie, right? Long time ago, right? We marked, hey, we got an evening star. Then it's moving sideways. So the Euro Aussie, pound Aussie, because of that Aussie has been a bit of a trick bag. Joy, what's up?
Oh, no, I'm sorry. I'm on
Oh,
two devices. My bad. I don't know what I did.
all right. Uh, so taking a look at this pound Aussie, right? So no 382, bouncing around. Stochastic is now back in the buy zone. Okay. Bit of a mess, but this is kind of similar to that Euro Aussie. Like, look at this, look what's going on. Just all types of these are sub fibs here, right? But you can see, let me clean this out because I was tracking this this range on those sub fibs. So let me clean this up so we'll see it more clearly. All right. But you can see, right? This is the initial move, right? That was a while ago now that we spotted that. And you can see how this is still trying to move up, trying to move along. Okay. Still trying to move along. So we'll see, right, if we can maintain this bullish narrative. Okay. Stuff all over the place that I brought up from those 5-minute charts. But so here we are, right? We broke below that 1918 level, but look how we are now forming these higher highs and higher lows, trying to get back long. Okay, again, similar to that Euro Aussie, right? So we'll see if it can maintain this momentum and continue to move towards that 118 extension. Okay, could take a while, but that's what it's looking like right now. Okay, still within our AB boundary, broke inner outer long-term trend line. Then we got range bound, happened here, right? And then it broke down and broke up. Okay, so let's see what happens with the pound Aussie. Still long, but necessarily. Let's see. A lot of back and forth with this one. A lot of back and forth. So try to spot and catch. So this one here, if it is going to move back long, see how this has been back and forth? We got whipsawed, right? So if it starts trending again, right, we can just say, okay, if it's going to continue to get long, considering what we saw on the 4-hour, then we can look to play these swings from here. Okay. It's a nice U-turn right now. Okay. So let's see, right, if we can get pullbacks and continuations to the upside. Questions on the pound Aussie?
Yeah, I think it's above the cloud on the 1 hour.
Oh, it is? Let me put it on. Appreciate that. It is. Thanks, Jeremy. Appreciate it. So, we can see, right, that the Euro Aussie, right? I appreciate that, right? Because those are additional confirmations, right? So we're kind of caught in between wondering, what might happen. Maybe we could throw that cloud in for additional confirmation. We got a beautiful pull back to the cloud. Missed that. Wow. My goodness. All right, beautiful swing. So let's see. Let's see if it wants to continue long. If the pound, if they hold rates, like I said, the Aussie is a lot of back and forth with that Australian dollar. But for some reason, I'm just in my mind, I'm like, man, that Euro Aussie and that pound Aussie may continue long. So those are my thoughts on that. Moving on to the pound CAD. Right. Weekly level, right? Just kind of neutral to bearish there. Stochastic in the sell zone. You can see how we're sitting at key levels. Okay. Key levels can go either way, right? If we get a break below that 171, we can continue to move down. We've got a support that's coming in at the low here. Hold on 1 second. Thank you. All right. So coming down. Oh, my chart got messed up from my cell phone. Okay. Rework this one a bit. There we go. All right. So this is what it's been looking like across the board. Okay. So then long, right? But look how we're just moving sideways now. Okay. So if you're long, continue to hold long. It's got to make his mind up. Right? Here, right, we were talking about a break below that level, right? But it seems like it wants to hold up. So we'll see. If we get a relief, right, a continued correction in that oil price going into next week. We looked at oil, right? We saw that on the 4 was in that 80-20 zone, moving down a bit on the correction. Then maybe we continue to get long at that point, right? But overall, this has been a long, drawn out fib. Okay. What did I just do there? I double up on one. I think I did. All right. So here, all right. So maybe we hold and we continue long from there. Okay. So let's see. Let's keep a close eye on what happens with that oil price, right? We know about the data that came out of the Bank of England, but they're talking about holding rates, right? Still some more work to do. So we'll see if we can pick up from this level. But you can see this has just been a long, drawn out move. Okay. But hey, 61.8 monthly support, price got long. Still within the framework, still within that ABCD pattern that we like to look for. Just keeping it simple. Right? I'm not concerned about all of this. Do I have my direction right? Okay. Do I have my sweet spots? Have I worked out my risk? Take the trade. That's the pound Aussie. Continued long play for right now. See what happens next week. See if we can get that crown to play out. And then we move on from there. Any questions on the pound Aussie? Nope. I mean the pound cat, I'm sorry.
Sure.
All right. Pound Swissy. Long, right? Okay. Long, trying to get a new low price, but we've been moving up. Okay, continued Swiss narrative. So here we are. This play here got that original bounce off the 382. Can we push down? I would love for that to correct and hit that buy zone. That's what I'm waiting for. So I don't have anything yet. Right? If it can come down and hit that buy zone, come down around that area, look to put a position. Had this drawn up for a while. Had it drawn up for a while, right? That was the original move there. Okay. Didn't get the low price that I wanted there, but it took off. Look at that. ABCD move. Now we're just seeing if we can get that low price. So hopefully we can, right? Maybe it puts in the low there and wants to continue, not sure. But that's where we are on the pound Swissy. Any questions on that? Let's look at it from the one. All right. Here's that 1 hour play. We just draw them up. See what we can get. Okay. Similar scenario. Can we get a low price on that? Okay. All right. Pound yen. Okay. It's moving long. Boy, are we approaching those levels, right? With these yen crosses. Okay. Hit that level, that 195.24 the last time and collapsed. Okay. Then it recovered. Yeah, that's the BOJ, right? Intervention at play. All right. Now, here we are on this daily. Uh-oh. Moving too fast. 80-20 zone. I don't know if it's going to get there, but if we could push to that 195.24, man, I'd like to short from there. But we're technically in an 80-20 zone and we're starting to see it short now, right? Hey, you start to get below, right? What is this? 188.96, whatever that weekly level is. Let me just bring in this daily level right there. Okay. 187.99, right? We get below that, watch out. All right. Watch out. There. Okay. But we're just high, right? And this is what we mean by like, man, the prices are just so high, too high right now. Okay. So we wait patiently, see if we can get that correction back to the downside. But you can see it, the situation starting to change a little bit here, okay, on this pound yen. Go down to the 4. New AB boundary. So we're looking for a correction. Okay. So all signs are looking, hey, can we move down? And if we get up around that 195.24 though, that puts us in the 80-20 zone on the floor. So if we can get one drive up, I would prefer for that to happen. But we'll see. That's the ideal situation, is for us to get a move up, at least for me. Right. And then start to see that reversal take place. That could be some major pips there. All right, so let's continue to watch the yen closely. Any questions on the pound yen?
On
Yeah,
this one
Benny,
too,
I
bro,
think on
just
the
to add
15.
to it.
Oh, sorry.
Go ahead, Jeremy.
Yeah, I was looking at the 15 and it's in the 618 zone short below the clock.
15? Let's take a look.
15, yeah.
All right. Let's check it out. Let's check it out. Let's see. See what we got. Something like that.
No, I think it might be a south fade, but
You got a fib that you draw or sub fib? Sub fib
yeah, it's a south fade, yeah.
running from the low?
Yeah, no, from the high
Or you running
up
from the high?
there of of 192.354.
There we go. I see it.
Yeah. Yeah.
So you want to see if that holds, see if it continues to get short, see if it stays in the cloud, comes back down. Let's see. Like your idea. Let's see what happens. Appreciate it. That's going to be quite interesting. Thank you, Jeremy. Ryan, what were you going to say?
Yeah, a couple things. On the one, we also got a break below the cloud. But on the month, this is another one, the monthly and on the weekly, you pushed into the 118, 127 zone.
All right. Got that there below the cloud. And Ryan and Jeremy cloud chasing. I like it. That's the monthly. Cool, right? So pressing that level, 195.24, 80.20 on the monthly. And then we drop it down to the weekly. Same thing. Okay. Appreciate it. It's a key level, eh?
That, yeah, and it'll be interesting. So the high on that weekly actually created a swing high there. So it'll be interesting because I was watching at 195 level too.
Mhm.
Um,
Oh yeah, gotta put that in. You're right.
and so it'll be interesting to see. Like I said, I have my eye on that 195 level too.
Hmm.
Um, so it'll be interesting to see if we come back up to push into that level, and then we'll have 80/20s all the way through. But yeah,
Makes sense. Makes sense. Yeah, right around that. Oh man, I like it. Oh man, lots of good things shaping up. And these type of scenarios, man, you can sit on them for a while too if they play out. So
hmm
looking forward to it. All right. Uh get to the rest of these pounds. Then I'm gonna hit the rest of these dollar pairs, and then I got a hard stop about 9:30. Um, all right. So pound NZD, right? Been long. Okay. Are we gonna find support right here at this level, right? We see we're wicking out right there from the weekly, but that's past resistance, right? So we've been talking about this, right? Bullish crown. Okay. So let's come down and see, right? Again, man, right? Didn't get that. It came straight off that 382. Straight off that 382. And we might, if this continues, right? This continues long, then we're not gonna get the deep correction on that. Right? It's gonna move like that. So that may be a setup here. Would it break back above that 209 level to continue long? All right, you can see that wave starting to form there. But that was the original idea, right? Coming off this last, right? Beautiful. You had everything you wanted here. It's a beautiful thing about the structure, right? The framework. You had a beautiful 80/20 on the previous fib that gave us a deep 8-6 pullback and then continued to the C to D, which gave us this new fib. This was just off the 382. So I was hoping for a deep pullback. That would have been 624 pips. But maybe we look to continue here now, right? Continue to get long from here. So you just bring it in and wonder, like, okay, 382 there. So here's that same setup there. We're getting back above that level. So it looks like, hey, I want to continue long. Okay. On the pound NZD. So continue to watch that one and see if that one will give us a pull, some sort of a pullback and then a continuation long, but we may not get that deep correction on this pair. All right, so that's that there. Pound dollar. Okay, we should know which way this one is heading, coming off of last week. All right, bearish, bearish, bearish. All right. We're watching that 125.20 level, broken close below it. Okay, broken close below it. Okay, moving short. It's beautiful. Okay, stochastics in the sell zone. So when we move down through these charts, we want to continue to look for bearish opportunities. So we just got a 4-hour extension hit. Okay, here it's an ABCD move. Doesn't matter, right? The asset class or the currency pair. That's an ABCD move, right? A, B, C, D. And that was a beautiful one to catch because you had a daily resistance level right at 127 up against that 61.8. Doesn't get too much better than that. Okay. So now we're gonna come into next week saying, hey, can we eventually start working towards new highs to get short? And that's what we have on our 1 hour time frame. A new AB boundary. Can we get a pullback to our sweet spot and then look to continue short? Questions on the pound dollar?
Yeah, Benny.
Yes, sir.
On the four, I think there's an 80-20 of the C.
Let me see. Oh, I got you. Off a subfib.
Yeah, if you run it up that C. Yeah, that high.
Yeah. Yep, that makes sense. So it's just a matter of if it want where it's gonna form that low, right? Because I like it. I like the idea because we've got it set up on the 1 hour already, a new AB boundary. So this can just serve as additional confirmation. But for this new capital, right, fib to form on this 4, we need a swing low. See what I'm saying? And we're not there yet. So technically, once we get that official swing low, then our C becomes our new A. And once we get that swing low to form for that D, then that'll become our new B, right? So if we start to form there, it'll look like that. Okay? So we'll see. But the subfib is giving us, right, some good confirmation that that slowdown is there in that zone, and maybe we form it. Okay. But I'm wondering if we'll get it to start to recover and move to the upside before we hit that extension and before we reach that daily support at 123.76. So appreciate it. We'll continue to watch that one to see when it wants to correct. All right. So that's the pound dollar. Moving on, I'm going to just go straight to the NZD USD, then hit these other dollar pairs. Then we're going to wrap it up. Have an appointment. So bearish, right? Ever since that evening star. Okay. Complete breakdown. Candlestick formation, sign language of the Forex market, right? So if we move forward, we're just continuing to the downside, ABCD wave. Okay. Came in about 50%. We've been moving down ever since. So you can see how once you develop the patience, and you get some capital behind you, and you become more of a swing trader. Now you develop into a positional trader. You can see where it has its advantages. Right? Just letting trades run. They're going to bounce back and forth. Some days you're going to be up, some days you're going to be down. It's kind of like your stock portfolio at that point, right? Where you buy and hold, and some days, depending on how big your stock portfolio is, one day, a move in the market, your portfolio could be down 35, 40K, and then it's up. But over time is moving in the direction that you need it to move. Right? So over time, we look for this to continue down to this D extension. But it's going to take a while. So this is more just, hey, I'm selling it, I'm holding it. Okay. It's a beautiful place to be when we get there. We all get to that point. If we ever want to be at that point. Right? I know I do. So NZD USD bearish, right? Came in at a 50% with daily resistance. And now we're moving down. So to take advantage of that, you want to wait for pullbacks, right? How Jeremy had that sub fib running. Okay, on that last pair. Can we get a sweet spot? This one? No, right? Not right now. But that doesn't mean that we won't get it in the future for that continued move to the downside, because ultimately, right, if this daily narrative is going to play out and we're eventually going to get to that daily 61.8, then we know we have time to still get involved with that move. Okay. So if I link that down to the lower time frames, yeah, we might miss some setups because they didn't hit our sweet spot. But if we still have so far to go, then that still gives us an opportunity. Right? There it is right there. Okay. So if we come in at this D extension here and it didn't get into our sell zone, that's okay. Because eventually we're going to have a new fib set up. We're going to get a high price, and then we're going to be able to short from there. So that's the NZD USD. Overall bearish. You all remember that double top? That seemed like that was ages ago. Right? Ages ago. Now, look how it's continued to move down. And since that double top, right, you may be out and you may be asking yourself, like, man, when I get to the point where I'm just going to hold these trades, look how that's still moving down. I don't even have to, you know, have more transactional costs or anything. I can just let it run, right? I can just let it just go and just accumulate while I'm asleep. You know, that's the goal. All right. So that's the NZD USD. Want to move into these dollar pairs, take a look at the dollar CAD. Okay. Long. No doubt about it. We're still within that Fibonacci framework. Moving long, we're above 137.66 now. That's a daily level. All right. And congratulations, right? If you've been long in this UCAD, do our trades take a while? They do. Right. But sometimes I'm sitting at work like, man, it's taking a while for me to get paid. I gotta wait another 2 weeks. Okay. So if we can do that and we can wait for that check, we can click the button on our computer, you know, work our risk out and wait for these trades to hit their target. We can do it. We can do it. Okay. 281, right? So you had a couple good ones there. Crazy, right? That started from an 80-20 swing. Look at that. That was an original 80-20. And then we got long, right? We took out the A coming from the downside, and now we've just continued long. So bullish on the dollar CAD. And now we're in the 80-20 zone. We broke above 137.66. This is one to keep your eyes on next week. Keep your eye on that DXY. If we see some relief for the dollar, this might play right into this 80-20 on the dollar CAD. Long, but we are in an up retracement zone. Any questions? Should you mark that one down for sure? Okay. So we're in that zone. If we just get price back to that 382, or 85 pips or so. Okay. Then we start to look for that low price to get back long. Dollar Swiss. Long. All right. We were talking about that V-type recovery that we have going on. We got it. It's continuing. Plays into our narrative. Okay. We're pushing pretty high. Stochastic's in the buy zone, right? It's going to keep running. Maybe we get to that 92.41 before we see relief. We saw it last time. Don't know if it'll be that drastic, but right, this is beautiful price action when we talk about how, right, um, how price just climbs the staircase of support and resistance, right? how we just steadily climb the staircase. Right? Even had a level here. Right? Climbing the staircase of support and resistance. Scoring a point, pulling back. Scoring a point, pulling back. Scoring a point, breaking through the levels, and pulling back. Beautiful price action. See that? Okay. So eventually, right, when we come back down, eventually we'll break through support. Just the fundamental building blocks of the market and understanding price action. So this becomes, right? We got R1. Okay. Our R2, so to speak. Okay. R3. R4. See that? Mhm. And then eventually, right? We don't know. We have to wait for it to get there to see if we form another low. But right now, if this was to turn over, right? This would be our S1. See how past resistance becomes future support. Our S2. S3. S4. Okay. And then these could change, these levels, depending on, right, when we get to, we move up here, maybe we form another low, and then that'll be S1. But sometimes, right, it's just spatial intelligence, right, and to really realize what's going on. Okay. This is our R5. See that? See how that works? And see how we can bring this straight across here. Right? Bang, bang, bang. Okay. See what I'm saying? We're not playing games. Okay. There you go. Quick nuts and bolts support and resistance lesson. That's how they form. And that's why we always talk about what? Swing highs and swing lows and relevant levels. Okay. Relevant levels as this moves up. These are your relevant levels of resistance, right? Past resistance levels. Okay. Okay. This is a mountain. This is the sun is shining. Right? The rays on this side of the mountain. Right? Bang, 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 bang. Score a point, pull back. Score a point, pull back. Score a point, pull back. That's price action. All right, that's the dollar Swiss. Moving on to the dollar yen. We'll wrap this up. Long. Long. Crazy, right? $156. 156.
Potentially, for sure.
Yeah. Hey, it's not magic, it's just math. It's just math. Extension hit on the daily. Look at that. It's formed a higher, we got a higher low on the stochastic. That price is running. Sooner or later, get that correction. Beautiful all the way around. 80-20, that swung to a C to D move. 156 right there. Do we get a correction to the downside prior to running up to that level? It's a weekly D extension.
Or do we run up to that level and give us an 80-20?
Yes.
Then DOJ intervention.
Correct. Correct.
This sequence is just, it's beautiful, man. It's beautiful how the game works.
It is. We just have to stay patient with it, right?
That's it.
Just have to stay patient, and it'll give us everything that we're looking for. Use proper risk management. Everything. Realize that if you develop the discipline now, the capital, the opportunities are there, and you can get consistent if you can build that track record. Right? The opportunities are there, but you have to remain patient and give yourself time. And like Ryan says, keep showing up for yourself each and every day, understanding that this is a life-changing skill set. This is all I have for this weekend's weekly ritual, everybody. Ryan, anything before we close out, sir?
Great session, bro. People, the opportunity is there, right? And so we'll continue to press on you guys to continue diving in on your patience, continue diving in on the accountability, tap into the accountability group that meets 6 p.m. Eastern Standard Time, Monday through Saturday, right? At least Monday through Friday. I'm done that. You can chime in on that if you guys don't meet on Saturday too. But tap into the accountability group. The community is there to continue to enhance the learning experience, the growth experience. And our goal is to give you everything that you need and maybe even everything that you want to reach the next level that you desire. So we're going to continue bringing the value. Members of the group are continuing to bring the value. So make sure that you tap in. If you got anybody that's looking to come along on this journey with us, because it's about to get really exciting, have them tap in with us too. Appreciate you, bro.
Appreciate you as well. And we appreciate all of you. Keep up the great work. Keep working hard. That accountability group is awesome. Awesome, awesome idea. You know, taking ownership, right, of your results. But hey, everybody enjoy your weekend. And always remember, don't just count those pips, but count your blessings. Bye for now.
Thank you.
You're welcome.